Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 23rd, 2026, and we're diving into Glacier Bancorp's latest earnings report for the fourth quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Glacier Bancorp has had an eventful quarter, especially with their recent acquisitions and financial performance. I'm excited to break it all down for our viewers.
Revenue and profitability overview. Let's start with the financial highlights. Glacier Bancorp reported a net income of $63.8 million for the fourth quarter of 2025, which is a 6% decrease from the previous quarter, but a 3% increase year over year. John, how does this align with market expectations?
Well, the adjusted earnings per share came in at 49 cents, which fell short of the forecasted 59 cents by analysts. This miss can be attributed to acquisition-related expenses and credit loss provisions. Despite the shortfall, the year-over-year increase in net income indicates some underlying strength in their operations.
Acquisitions and strategic expansion.
This acquisition is quite strategic. By entering the Texas market, Glacier Bancorp is expanding its footprint into a high-growth region. The acquisition added $3.357 billion in assets, which is a substantial boost to their balance sheet. This move positions them well for future growth and diversification.
Interest income and margin expansion. Net interest income for the quarter was $266 million, with a net interest margin of 3.58%. What are the key drivers behind these figures?
The increase in net interest income, up 18% from the previous quarter, is primarily driven by higher loan yields and increased average loan balances. The net interest margin also saw a healthy expansion, reflecting effective asset-liability management and a favorable interest rate environment.
Credit quality and risk management. Credit quality is always a concern for banks. Glacier Bancorp reported non-performing assets of $68.9 million. How is the company managing its credit risk?
Non-performing assets increased, partly due to the Guaranty acquisition. However, the allowance for credit losses remains robust at 1.22% of total loans. The company has also set aside $35.7 million for credit loss provisions this quarter, indicating a proactive approach to managing potential risks.
Operational efficiencies and future outlook. Operational efficiency is crucial for profitability. Glacier Bancorp's efficiency ratio improved to 61.04%. What does this tell us about their operational performance?
The improvement in the efficiency ratio suggests that Glacier Bancorp is effectively managing its expenses relative to income. This is a positive sign, especially as they continue to integrate recent acquisitions. Additionally, the consistent dividend declaration reflects confidence in their cash flow and future prospects.
And what about their outlook for 2026?
CEO Randy Chesler emphasized their focus on disciplined growth and creating long-term value for shareholders. With strategic acquisitions and a strong community banking model, they are well-positioned for continued success.
Key takeaways. In summary, Glacier Bancorp has delivered a solid performance in 2025, with net income reaching $239 million and an adjusted EPS of 1.99 cents. Their loan portfolio grew by 21%, and they maintained a consistent dividend payout. John, any final thoughts on their investment prospects?
Glacier Bancorp's strategic acquisitions and strong financial metrics make it an attractive investment, especially for those looking for exposure to regional banks with growth potential. Their focus on operational efficiency and market expansion bodes well for future performance.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, Please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Glacier Bancorp's performance in the comments below.